So, welcome, everybody. It's Tuesday morning, and yeah, it's. I just want to start off with USDJPY. Look at that. Look at this here. Just missed it. Just missed the spike to the downside. That is half a pip. Half a pip from a trigger. Wow. There we go. It is what it is. So. Yeah, there we go. Right. Anyway, let's get started. So one thing that I want everyone to, look at is my routine here. All right, so I do it every day for a reason. Lots of you obviously who hop on here regularly will notice that. But obviously, yeah, I do it like this for a reason, so, it's getting everyone into that routine. Because obviously, one thing that you guys know I'm quite big on is identifying the direction you want to take your particular currency pair before you've even looked at that chart. So you're not concentrating on which direction you should take it in. You're concentrating on, your entry, how aggressive you want to be. So let's start off here by looking at the dollar. We obviously had this big, gap on Sunday night, right? Now, some of you will look at it that it's, filled it, and I always, speak about there is good data which pumps an, economy, a currency, and then there's bad data which pumps an economy, currency. And obviously, this war for the dollar has been, kind of bad news, but obviously it's been pumping. So obviously inflation's high, dollar can act as a, safe haven. Oil's been the tradable asset, and oil is obviously priced in dollars. So that's obviously that's something that's pretty kind of, important to remember. Now, as well as this bad data, all right, dollar has had lots of good data. It's got strong jobs, at the moment. The employment sector's doing pretty well. GDP has been okay, manufacturing's been okay, nothing's been damaged that bad. So taking everything out, if you put it against other currencies, it's relatively strong. So that's why, yes, we obviously had this gap here, which is the, signing of the peace deal. Um, you know, um, and so that's the damage limitation here. I actually think the peace deal was priced in, so everyone's looking at it from here. We probably should be looking at it from up here. All right, that's a big price in here. All right, and so like I mentioned yesterday, I can see dollar probably ranging in between this kind of, kind of stage here, where I don't think we're going to pop that much, lower until tomorrow afternoon. That's obviously what everyone's gearing up for is FOMC tomorrow. How's Kevin Walsh gonna speak? It's his first one that he's obviously chaired, and so it'll be quite interesting, to obviously see, his kind of attitude towards everything, his tone. Yeah, even I'm quite interested. I think I'm be at the airport, but yeah, might try and obviously watch that before we take off. So yeah. Now looking into the dollar here, all right, currently at an area of, smaller support here. All right, you could probably even drag this down a little bit lower to kind of this area here. Now, because we broke above this quite cleanly, you saw we had this big gap here. Price, hasn't moved at all. It made up its direction. Price obviously, moved this way here. broke through, but obviously, naturally kind of struggling. Now, do I think there is enough oomph for dollar to hit 100? It all depends on, how confident everyone is in Kevin Walsh. There's going to be a lot of expectations. Remember, obviously, Donald Trump chose him. All right, and he's going to have chosen for a reason. It's like anything, isn't it? We put you in this position of power, so you got to stick with your original character that got you here in the first place. So he's a lot more what they call hawkish, optimistic, aggressive than obviously Jerome Powell was. So there could be a bit of hype here, which might take dollar up to that 100. It might be that speech, which everyone's like, you know what, I can see this guy guiding our banking rates and economy into a good place. So that's that's kind of what I'm expecting. That will be the hype, right? And then obviously expectation comes in afterwards. So because of that, I do think there's a probability which is probably pretty even that we're going to be hitting this 100, purely on that fact. The other thing that I quite like is yields have recovered slightly. Still obviously in the amber zone here, but there's a reason why it's not broken, through this, level here. And there is still obviously confidence in the US dollar, clearly, if yields are obviously staying where they are. We got the stock market's about break even, not really doing very much. We've got oil, still struggling to break this 80. So, that's kind of where we are at here. So, optimism wise, I'd say it's a bit of a kind of intrepid London session here, where it's not going to be aggressive, but it probably, kind of making its mind up. Now, let's have a look in regards to what is happening. We've obviously had Japan increase interest rates slightly, hasn't really done anything. We had Australia kept theirs where they are. I'm expecting that to continue throughout this week. We've got ADP employment change at 115, some import export, but nothing else really to kind of worry about. We've got Atlanta GDP as well. So, but remember, everything is gearing up for tomorrow afternoon. We've got a really, really busy day tomorrow. We've got inflation data for euro, inflation data for the pound. So yeah, it's one of those days where we do have to be, yeah, kind of, be aware that things will start to get priced in. All right. And like I'd said, I kind of think because he's been hired, but because he's a bit more aggressive, I can see dollar potentially creeping up in between this, 99, 900 and 100 area. So let's wait and see what happens there. Aussie, I haven't really fancied it. So I've stayed away. It's a bit, messy. I'm more confident on things like pound and euro. Pound, I preferred euro this morning, and that's why we, stayed away from it. We got a lot of, so we've obviously got an area here. But then we've got a pretty strong area down here. All right. So that's why I didn't really like it as much as I did Euro. Euro, I like that we've broken through this. All right. You can see here, we've broken through it. So I much preferred this entry. This one's actually triggered. Should be in a bit of profit, and hopefully we'll see this nice continuation to the downside here. But yeah, you can obviously see why, as opposed to pound where it's just a bit messy. just a little bit messier. So that's why I preferred euro. Gold, I'm kind of hoping for a nice little pumper. I want to tap into our area. I have played it a bit safe. I was toying up with probably coming in around here, around this 4330, 4330. But I just wanted to give it a little bit of extra, room because there is a bit of a tailwind on gold to the upside. However, if if we're looking at this on a 15 minute, let's just have a look at it, even on a 2 hour. You could argue, it's not clean that this was a downtrend, and then you could argue if the downtrend was going to continue, it would have been this area here, yeah, and then we would have continued. Now, what's ended up happening here is we've continued up. We've obviously got this area here, which is starting to hold, and I think that's going to be tricky to break. So we might see a move a little bit like this. But let's wait and see. Again, it's not hard to draw these areas out here. Everyone can see prices consolidated here, and prices consolidated here. Yeah. You could even drag this across, slightly and do something like this, So price, if we were to move this up a little bit higher, because you can probably split those up, price could potentially be drawn into this area here to then tailwind off. So, looking at this on the 15 minute here, I'm expecting, we've obviously got a lot of resistance here. So I'm expecting this to probably get spiked and then obviously continue to the downside, or at least challenge these lows here. So let me just get rid of these. There we go. So hoping for gold just to pop up slightly more. And then USDJPY, we were very, very unlucky here. I mean, this was spot on, but just a little bit out. So. Yeah, can't argue with it. Half a pip, that would have been beautiful trade. This it would have been absolutely beautiful, but it's not happened, and so it is what it is. I'm still going to leave that one open, but I'm going to see how this next 2 hour candle closes, and then potentially might look to take that one off the table. But we've got euro. Euro is one that we've got. I'm happy with obviously euro at the moment. So let's wait and see obviously what happens with this one here. And then gold, just want this one to, there we go, just to drift up, take out these highs, but then come straight back in. So let's wait and see. Remember, I've got 3 entries here. One, two, three. So that's what I'm kind of hoping. Right, let's go through a few of these questions. Why is dollar filling the gap? Alex, obviously I've gone through that. It isn't, I believe, and obviously lots of I think it's a really retail mindset to think that a gap will always be filled, all right? Because, hindsight historically it always will. It's just I would class a gap as being filled as it happening on a Sunday night. Um, you know, approaching a potential gap. A day after, 2 days after, it's got no meaning at all. Um, so yeah, just be aware of that. Yields filled the gap as well. Robin, how many pips do you from entry to trigger above, trigger below, and what do you suggest should be used? How many pips do you from entry? So I don't normally judge it like that. So what I do, I obviously analyze the daily range of obviously each individual pair. So if we go to, say, when we looking at this, which price was here, yeah? All right, price was actually down here, yeah? All right, so you've got to look at the daily range of how much things move, how much are they likely to kind of move. I'd say potentially something like this is going to be the average daily range of about 75 pips. All right, so we've got a lot both ways, in regards to obviously what we can be looking at here. So that's obviously what I always highlight to everyone. Just be realistic, all right? We could have here. We could have had an entry if I, just draw it on. We could have had an entry here. There's nothing wrong with that. All right, you could have had an entry up here. There's nothing wrong with that. But obviously, I'd like to be a bit realistic, in regards to right, what's going to trigger and, what are the chances of it triggering this morning. So obviously that's how I come up to it. But once you understand the direction of where you are actually trading, you all you've got to focus on is your entry. So all of your energy, all of your focus, your brain power is all about where am I going to enter? All right. And obviously that's yeah, one of the best things to kind of take out of your, mind. Alex, do you think we will see any bigger moves before interest rate? Yeah, like I said, I think that the optimism will be priced in. When Kevin will lower interest rate, dollar would fall, correct? Yeah, potentially. But then obviously what ends up happening is it balances out because obviously a lower interest rate, what does that encourage? If it's cheaper to borrow money, a country then borrows a lot of money. Everyone's spending. That's when you see, the house market flying, retail flying because it's cheap. It's cheap on credit cards. It's cheap. We are humans. You got to think of us like children. If they've, to get their pocket money, if they've only got to tidy their bedrooms, then they're gonna do that no problem. But obviously, if they've got to tidy up downstairs or do a bit of hoovering or brush their teeth or whatever, then they're obviously like, you know what, I don't want money this week. That's kind of how humans are, and obviously that's the big balance that every economy has. Probably a terrible example there, by the way. But that's how, think of an economy as, it's control. It's the heads controlling spending. If inflation gets too high, they got to curb spending. So how do they stop everyone spending? They increase interest rates, and obviously, what does that do? It becomes more expensive to borrow, money. So, housing market takes a bit of a dip, you know, employment, everything, but obviously it curbs that spending. So yeah, does anyone have any more questions? Any more for any more? Any more for any more? My coffee's cold. Okay, cool. Right. Well, I'm going to end it here. Have a great morning, everyone. And yeah, let's smash it. Stay on point. Stay ready. Don't do anything crazy, and yeah, we'll be all good. So have a good one, team. Have a good one.